Out of those four, which is the one you're going to be keeping an eye on the closest?
I think, surely the FOMC is going to cause a little bit of mechanical reaction in the markets, but really what we're keeping our eye on is the weekend's deadline for the tariffs between US and China, because that's something that you don't get clarity on, and that's something that can also trigger a much bigger risk, because it also brings into the fold the question about the suspension, the October tariffs that were suspended.
Right. How would you trade that? Or do you trade that at all?
That's a good question, and I think a tough one to answer. One of the things we think about with the tariffs is what Trump's motives are, because right now I think the reports suggest that between US and China, the understanding is that these tariffs will continue to be suspended as the talks go underway. So there seems to be some cautious optimism being traded in. But at the same time, I think the main takeaway here is that if any unexpected antagonism rises, even if it's not the tariffs being imposed, but just the trade talks become turning somewhat more dour, then I think risk can come off. So I think going into the weekend, a cautious mode would be due, particularly given the run-up up till November that we've seen.
Yeah, the threat of these tariffs, or the ones that are already existing, Vishnu, I'm just wondering how much of that has actually contributed to the inflationary pressures that we are seeing in China at the moment, or is it really just kind of a pork story?
I think I'll take you up on the pork story. I mean, really predominantly it is a pork story, and a lot of that is due to the swine flu. So I don't want to overplay the tariffs here, but at the same time, we bear in mind that insofar that U.S. farm goods, and particularly soybeans, have come into the mix of the tariffs, means that at the margin it hasn't helped. It has pushed up prices. Of course, farm purchases by Beijing subsequently will alleviate those. But what it also means is that so long as U.S.-China tensions continue to be there, then the supply-side cost-push pressures will remain in place. So at the margin, what it does is it leaves China in a slightly more stagflationary type of conditions for the PBOC to deal with.